guys, what's up? In this video, we're going to be talking about the bias predictor and how you can use it to effectively avoid the emotional pitfalls that we have month in, month out, day in, day out, week in, week out, right? So emotional pitfalls. Now, when it comes to trading, I know it can be tough, right? You have a buy setup, price hits your buy limit, or your market execute, it just hits your stop loss again. And it keeps on doing that. And then once you've finally given up, once you've blown your account, that's when price starts to go up. Yeah, that sucks. That really sucks, right? So being able to manage your emotions and being able to manage these emotional impulses is extremely important, right? You have to understand that managing your emotions, controlling these emotional impulses, that's the key to longevity in this game. That's what's going to give you a chance in the long run. Yes, you can lose $500 today. Let's say you have a $10,000 account. You lose $500 today, and so what? You still have 9,500 left, and tomorrow you can make $2,000 out of it, right? Number one, it's a game of probabilities. There's no such thing as, oh yes, I know the algorithm, and I can never go wrong. No, I mean, I know the algorithm too. My algorithm, right? Remember, an algorithm is a step-by-step process in which something works. So my algorithm is also a step-by-step process in which something works. And guess what? My algorithm is my model, and your algorithm is your model, right? It's not going to work every day. Now, let's say it does work every day. Fine. It's not going to work on the same time frame twice. Maybe it does. Maybe not 3 times. Some, not even 4 times, right? If it's on the 15-minute chart, at most it's going to happen twice a day. If it's on the 1 minute chart, sure, maybe you can find one every hour or every 2 hours, right? But the key is to control your fingers. Don't go ahead and keep on pressing buy, 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 sell, 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 sell. It's useless, okay? It's useless. Back testing is going to help you out. Okay, back testing is going to help you out. Journaling is going to help you out. Journaling, it's a you versus you thing, because if you do something wrong and you go the next day and do the same damn thing, right, you're going to be embarrassed. You're the same person that you were yesterday, but in fact, you're trying to strive to be a better one. Okay? So, in order to avoid these emotional pitfalls, we're going to be using the bias predictor. The bias predictor is a solution for everything. Okay? Emotional damage, emotional swings that come with trading is because you don't know the bias. It's because you're getting screwed on direction. Alright, so look no further. The bias predictor is here to help you out. Alright, so when it comes to understanding emotional trading, we have to know one thing, actually multiple things. We're going to fall victim to fear, greed, and the fear of missing out, FOMO, right? Now, when it comes to fear, that's something I don't have, because it's a damn trade. I'm just going to buy, I'm going to sell, I don't care. If I lose, I lose, right? But there are people that let fear govern their decisions. They're afraid to buy, they're afraid to sell, because that's the only money that they have. They don't want to lose that money. Okay, well, you need to take a leap. You need to take a step forward so that you can go forward in your journey in trading, right? The only way to get over the fear aspect of trading is for you to maybe not live, maybe take a demo account, maybe try taking trades there, then you build that rapport with yourself. Okay, this is what I should be looking for a buy. When this happens, I'm going to buy. This is what I'm going to be looking for a sell. That's when I'm going to sell. Okay, and then it comes to greed. Now, greed is something I suffer with. All right, it's never enough for me. There are instances in which, okay, I make so much of money, it's not enough, and then I go ahead, win the next one, and then after that, I keep on losing. Why? Because I haven't so for that particular day, I haven't come to terms with the fact that, okay, the moves are done for the day. Why am I trying to squeeze more out of it? Price is not going to move anywhere. It's just going to hunt for stops. Okay, so greed. Always set a limit for the number of trades that you're going to take. All right, if you use the bias predictor and the bias predictor says sell, well, take that one trade going for a sell, because after that there's not going to be another sell. It's most likely going to be a buy, or price is just going to stop. Look at the price action right now. It's not doing anything. You could get caught up in this price action. You can get in a sell, and if you're not content with it, you're going to try to buy now, or maybe you're even going to try to sell now, and you're just going to get chopped up left, right, and center. Okay, greed is something in which you can control. only by limiting yourself to the number of trades that you take per day or per week. All right. Okay. FOMO, the fear of missing out. Now that's something that hits me once in a while. Okay. That is something that definitely hits me once in a while. So when it comes to the fear of missing out, right, you see a displacement. You're trying to buy that displacement. You're trying to sell that displacement only for it to retrace, stop you out, and then go up or then go down. How do you get over, or how do you find a solution for the fear of missing out? Simple. When it comes to the fear of missing out, it isn't something to do with psychology. Okay? It's something to do with the most fundamental aspect of price, and that is premium and discount. Okay? That is premium and discount. Okay? If you see price, simply put, okay, running, right? What are you going to do? Find the dealing range that caused the change in the state of delivery. Assume it's this one. Okay, you're trying to buy here. You're trying to buy here. Yeah, you're trying to buy over here. You're trying to buy over here. Why? It's premium pricing. It is premium pricing. Wait for price to come down. Simple. All you got to do is you got to tell yourself, okay, you know what? I'm waiting for price to come here. I'm going to set an alarm at equilibrium. When price hits that alarm, when price hits that line, and when I get alerted on my phone, I'm going to be looking for buys then. Okay? What if price never comes down here? What if price just keeps on going up like that? Okay, fine. Now let's assume it does this. Now you're looking for what? Sells. Wait for price to come into premium. What if price never gave me my entry? Well, okay, there was no trade. Nothing that fits your model. If nothing fits your model, don't take the damn trade. All right? If you're not comfortable with it, if it isn't something that you tested rigorously, if it isn't something that you can identify, you have no business in taking it. Now, over here, do I have something that I can trade? Yes. In fact, I am long over here. Okay? I took partials right there. Take profit is somewhere up over here. It's because I'm using the high liquidity dealing range purge. If you look at the 5-minute chart, if you look at this here, then if you look at the 1 minute, you can see that we had multiple change of states between this low and this high. Okay, so we had one right here, 1, 2, 3, and here's the fourth one somewhere here. That makes this a high liquidity dealing range, right? So actually it's this right here. Okay, so when we purge this low, I went long here. Partials, full take profit up here somewhere. Now my stops at break even. It can do its own thing, right? So the key point is, if your model is there, take it. Don't fear the fact that you're going to miss out, because why? Look, he's retracing. It can go all the way down now. I don't care because I took partials, but it's retracing. It's coming back into discount. It's giving you a new opportunity to go long. Okay? That's the only way in which you're going to remove the fear of missing out, by understanding price valuation. Does Warren Buffett have the fear of missing out? No. Why? He's looking for severely underpriced stocks. What does that mean? He's looking for the stuff that fits his criteria, something that's cheap, right? So if you're going to buy gold, for example, you're going to buy it while it's cheap within the current dealing range. Okay? I hope you get what I mean. All right. Next up, the introduction of the bias predictor. Okay, all right, this is my favorite part, right? The bias predictor has helped me so much, and it's helping so many people. All right, now the bias predictor, what it's doing, or what it does, right? What it does is it essentially predicts the bias for the entire day, right? It predicts the bias for the entire day by 4:30 a.m. EST. Okay, by 4:30 a.m. EST. So if you look at this right here, there, right here, over here, you get the output that for today you got the output that gold was bearish. Okay, so what it does is essentially it's using mathematical relationship that I can't really speak about, right, to define what the bias is for the rest of the day. Now you can do the same thing for the 4 hour, for the 1 hour, for any candle actually. You can use this to determine what any candle is going to close like, right? If it's a 1 hour candle, you can say that, okay, the 1 hour candle is going to close bullish based on these mathematical parameters. Okay, now if you look at how to use this, now if you look at today as an example, so today we took sells over here, right, using the high liquidity dealing range purge example from my TTA exclusive concept video, right? So if you consider this high here and this low there, okay, look at the 5-minute chart, and on the 5-minute chart we can see that we have a CSD 1, CSD number 2, and we have CSD number 3, and price runs up, purging the high. We changed it lower, causing a CSD here, and that's your sell. Okay, and that, my friends, is your sell. Using the bias predictor followed by the high liquidity dealing range purge, you can use the two together and you could have gotten this fantastic sell. And remember, from my backtesting video, we were looking at the daily chart for the larger schematic, and this sell was on its way, right? This sell was on its way, and it happened, paired with high impact economic news drivers. Okay, right. So now, in order to demonstrate the user-friendly interface of the bias predictor, can you see how friendly it is? Simply put, it's down here, right? You add it, boom, down there. You know whether it's bearish or bullish. All you have to do is open up your charts at 4:30 a.m. EST, and you'll see that the predictor predicted what's going to happen between 4:30 and 2 p.m. EST. You have your bias, you have parameters that you're going to be looking for in price if you are to follow my way of trading, and boom shakalaka, you're good to go. All right, so I hope you understood that. Okay, now practical application. Okay, practical application. If we were to look at another day, so let's say if you were to look at yesterday's price action, not yesterday's price action, Tuesday's price action, right here. So let's find 4:30. So 4:30 is right there. Okay, right. So looking at this, right, we can see how using the bias predictor provides real insights, real great insights that you can use in your own trading multiple hours before all these guys wake up, right? All these other guys, before they wake up to do their trading, you have the bias predictor and you can literally prepare what you want to do with this data. Okay, you can literally prepare, think about what you want to do with this data, right? So if you consider this now, let's say what the prediction is. For this day it's bearish. Okay, now if it's bearish here, right, we are focusing on the New York session. So let's play price a bit. 7:30 onwards, there. What happens? It happens even before that, right? It happens even before that. So if you want to trade this, and if you see the merit in trading before the NY session, if your model allows for that, go for it, because 4:30 onwards, right? So here's 4:30, you can take this sell, right? Do we have a high liquidity dealing range purge? Let's see. High, low. So between these 2 points, how many CSDs do we have? Well, we have the first one here, 1, 2, let's see, 3, 4. Okay, we take that out. We have 3 inside. We take it out, break down. Bias predictor reveals that it's bearish. Take your sell. You're taking profit at the opposite end of the high liquidity dealing range purge, or actually the high liquidity dealing range there. Okay, what happens next? Goes up. See this top hunt? See this right there? Yeah, see that? Look. Okay, watch. What happened? Look. We break up. First we broke down, right? We traded up, took out a low here. That's change of state 1. See this now? Wait for it. Do we have a change of state 2? Yes, change of state 2. It's actually this. My bad. It's this change of state 2 right there. And now we have change of state 3 in a bit. Yes, change of state 3. All right. So now if I'm going to go long, I'm going to go long from below this. If I'm going to go short, I'm going to go short from above. What high? This high. Okay, go long. But we're interested in the shorting aspect, right? So look. Okay, now we have the data that's telling us go short. There's a small scalp for you, and then the day ends. Unfortunate that it's just like this, but there's a sell over here. Okay, but you can get the original sell here. You can get the buy using the concepts to know that in order to go down, we must go up. So we go up. Kind of a fail, but it still works out as a scalp. Do we get 30 pips, 30 to 50 pips from here? We get 30, we get 30 exactly. All right, that's my fixed partial. Okay, so I hope you found some insight in this. Okay, I really hope you found some insight in this, because once you use the bias predictor, you're never going to go back. Okay, if you have a solid model, if you have a proper understanding of price, using the bias predictor is not even a crutch. It's literally an advisor telling you, okay, you know what? Here's the deal. We're going to be bearish for the New York session. So, you know, if you want to go bearish, you got to do your thing. Let your model play out for a bearish model. And then boom, take profit. Okay, take profit. All right. Okay, so tips for using the bias predictor effectively. All right, so in order to use the bias predictor effectively, right, you have to have your own trading model, of course. Right now, if you don't have your own trading model, or if you are a struggling trader, if you are struggling to use all these different concepts that are floating around online, if you're in another community, if you're in multiple communities, you're going to find that sometimes things do gel together, while others, they have really conflicting approaches. So if you want to use a bias predictor properly, you can join the mentorship right now until the 31st of July. We're having a 20% off, right, for the mentorship, and you get the bias predictor for free. So you can learn how we use it, you can learn my methodology, and you can apply it with the bias predictor. Right? So one practical tip for using the bias predictor is, number one, use it as a contrarian style of trading. So if you see buy side gone, so if you look at the high liquidity dealing range purge, right, and it says that the session is bearish, go for the sell. That's one practical tip. Okay, you can it literally works with any trading model, but it works the best with my stuff. All right, so get your bias predictor. It's free if you're in the mentorship. Otherwise, you gotta pay for it. Obviously, it's not for free. It's my hard work and effort that went into creating it, and to define the mathematical relationship that goes towards creating the bias. So I really hope you guys can support the bias predictor by purchasing it for your own trading as well. Again, it's not to be used as a crutch. I'm telling you that right now. All right, it's basically to give you confluence in your trading. So instead of looking for price action confluences and all of those 5, 6, 7, 8 things that you want to be looking for, you can use this prediction, because it is based on mathematical relationships that work 80 to 90% of the time. And simply put, you can continue trading as usual. Okay. All right, so to conclude the video, what do we do? What do we learn? We learned how emotional trading is bad. Very, very, very bad. All right, you're going to suffer tilt. You're going to suffer emotional, impulsive trading. You're going to have FOMO, greed, fear, and all of that bad shit. And the only thing that can help you towards to literally finding a solution for all of this, right, is the bias predictor. The bias predictor gives you the bias. After giving you the bias, there's no FOMO. There's no greed because you know the direction. You know that okay, if the bias predictor says sell, I'm waiting for premium. If it says buy, I'm waiting for a discount. What does that solve? FOMO. Okay, how about greed? Okay, greed. The bias predictor says buy and price has already gone up so far. Do I need to take any more trades? No. Why? Because if I'm going to go long, I'm going to go long at discount. And guess what? Where's price now? Premium. Premium. All right. So the bias predictor can literally solve all your mental problems as well. And when I say mental problems, of course, you know what I mean. I mean your trading problems psychologically. All right. Okay. So guys, that's pretty much it. All right. So without further ado, let me end this video by asking you guys to subscribe, like this video, and give me a comment on whether you found this insightful or not, right? On whether you found this insightful or not, and let me know, give me ideas for new videos, because you guys' suggestions mean everything, because I would really like to serve you guys in terms of the content, if I can, if it doesn't violate the NDA that I have with my own community. I'll be happy to create videos for you guys based on topics you give me, right? So subscribe to the Trading Academy, like, comment, and subscribe, and of course get the bias predictor. It won't go wrong. You won't go wrong. All right. So if you want the bias predictor, there's a link in the description below to my Telegram. Just send me a message saying bias predictor, and I'll send you the payment link. And of course, if you want to see how it works, you can go through my YouTube channel, go through the case studies, go through how to use it, and make your decision. All right. It works every single day, every single week, and it will not stop working. Haha, cringe, I know, but it is what it is. All right, guys. With that said, I'll see you in the next one. Good luck and good trading. Bye bye.